Good day, champions. This is Noble.Mike.Jamison, and I wanted to take a quick look at this asset, which is GBP USD. And we were initially looking at this because it had a nice bullish trend, right? So if we start down here, we know it was pushing up with a higher high, higher low, higher high, higher low, higher high. And obviously, if we were expecting this asset to continue this bullish trend, we would have liked to seen a pullback and a push to create a new higher high, but it didn't. So this low right here came below this low right here. So therefore, we ended up with a change of character, which means we are now transitioning from an upward trend to a downward trend because of this change of character. Okay. So, because of that, we wanted to look for potential opportunities to take a sell trade on the downside. So, what do we do? The first thing we do, I know this chart is a little bit busy, but I'm going to explain to you what you're looking at. The first thing we did was mark off our trend high, as you can indicate it right here, price range high, and we initially marked off our trend low, which is right here, right? Trend high, trend low. So that gives you the broad range in which we're looking at. Okay. So we're looking at this price range right here from the high to the low. All right. Since we're looking at that price range, now we want to break down and see what is the order flow within this price range, okay, of the trend. So typically we go down to the lower time frame to take a closer look at the order flow of that price range or of a price range. Okay. So here's the top of that and here's the bottom of that. So you can tell that the order flow within this price range is bearish. Okay. Is bearish. Here's our change of character from the trend on the higher time frame. You can see it created a new low right here. And we want to take a look at the order flow that's within here. So if I mark off the order flow for you by changing the color of the highs and lows, right? This is a lower high, lower low, lower high, lower low, lower high, and then a lower low, right? So the order flow in this particular price range is identified by the blue dotted lines, okay? So we're clearly creating lower highs and lower lows in this downward trend right here. So what we expect it to do is to continue to do that, and we want to enter a a day trade off of this expectation. Okay, so we're going to take a look at the last order flow range, which is identified by my blue dotted lines right here. So this is the high. This is the high of the order flow, and this is the low of the order flow. So therefore, our order flow price range is right in here. Okay, is right in here. We've identified those ranges. Okay, so what we want to do is we want to identify what is the best price that we can take for this asset to do a pullback and then go ahead and break this low to continue its bearish move. Okay, that's what we're looking for now. And we're going to continue to do that. So what did we do? The first thing we did was we marked off our premium and discount levels, and we used volume profile to do that. So that's what this orange dotted line is right here. You can see it says right here, it says volume, price, position of interest, order flow. How did I get that? Well, I use volume to determine my premium and discount areas. So what I do is I grab the volume indicator, volume, fixed volume indicator, and I say this is the high point that put in the low point, and it tells you exactly where most of the orders were during this price leg of the order flow. And it's right here at this red line, which I turn it to orange so we can identify it. So that tells me that any price above this orange line right here is a premium price, and any price below this orange line is a discounted price. And when you're looking to take sell orders, you want to take a premium for a sell. When you're looking to take a buy, you want a discount. So we want to obviously take a sell in this case. Okay. So we've identified that any price has to be above this orange line to be a premium sale. Then we identified this order block right here that was close to our premium value. All right. And once we identified this order block that was close to our premium value, we went down to the 1 hour time frame so we can identify our entry or strike zone. Okay. And so we used our um, rules for identifying valid order blocks. Here we have an impulsive move to the downside. That impulsive move created imbalance in the price, right? So these are orders that are imbalanced right here. And that impulsive move is also responsible for breaking structure, right? So this impulsive move, okay, this impulsive move also responsible for being a part of this breaker structure line. Okay, so we put our tool, our short tool here to indicate a 1 to 3 risk to reward, which we know we love those trades. Our stop loss is above the high of the order flow, and then we entered our take profit ranges along the way. So this is a potential 200 pip intraday trade that you can enter.